If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you, because they have announced a premium program. It's the Money Vikings MVP premium content, okay? And I have to tell you this right now. If you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year, and you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, they will give you access to other things such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil, and you need to get a paper, and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a Chinchilla Picking Podcast listener, and conquer your financial freedom.
Hey everybody, this is Chinchilla Picking Podcast. My name is David Underwood. I'm here with Brandon Beaver. As always, we hope to be entertaining, educational, and uplifting, because we want everyone to make money.
I don't care if I'm educational or entertaining. Really entertaining. You know, it just reminds me, like, the fact of the matter is, if you're not entertained by this, then you're not smart to begin with.
Wow, I say we restart.
No, I'm just going to keep going.
All right. Brandon needs a timeout. It's October the 5th, everybody. October the 5th, Tuesday.
Oh, thank you for reminding me what day it is. I haven't had a job for, like, I don't know, Thursday of last week. Separated from my job. It was amicable. There's no hard feelings whatsoever. It was just time to move on. But now I'm feeling like Tom Hanks and Castaway. That's the movie, right? You told me that was the movie before the show. Okay, yeah.
The movie.
So I'm going to start drawing faces on soccer balls, and
it was actually a volleyball, I believe.
Okay, maybe I'll start playing soccer with volleyballs.
5 days in, dude. You're only 5 days in.
I am losing my mind.
It will last during retirement, man.
I don't know. I need a job.
You gotta pull this together here. You don't need a job.
I need to do something. What am I going to... Okay, maybe I'll do more with the website.
Thank you. I think all of our listeners will love it if you finally updated our website, added another article about spreads, credit spreads, and the differences and how those work. But in the meantime, how about we do a podcast on stocks and investments? You know, that sounds like my cup of tea there.
Sure.
All right, guys. So we have a podcast tonight. It's about stocks and investments. And we got a few different topics. Brandon and I, the rules are Brandon and I meet up 5 minutes before the show. We tell each other what we're going to talk about. We do not discuss it. You hear the live discussion right here on the show. Brandon is going to lead us off. Brandon, let's get going into some investment news, some whatever related news, if you will. See what's happening in the world.
I got nothing. Okay, on our September 14th...
I'm carrying the show.
On our September 14th show 2 weeks ago, I called Take-Two Interactive a buy. It closed that day at $152.15. It is now trading just over $162. Even better, if you had the opportunity to buy in the days after when it was trading around $145, maybe you bought in at that point, maybe you averaged down, I don't know, but whatever. We're now around 6% over when I called it a buy and 9% over when I called it at the 145 mark. So 9% over the lows of that 145 mark over the past month. So it's been a nice move. You can take your profits now if you want. And I don't...
So you don't believe it's going higher?
In regards to the tech sector, I do believe that yields are going to weigh on it. I was very critical over those, over people who had that point just 6 months ago when we first started the show. That's because I believe that the yield rise was a fake out and it wound up being a fake out. This time I actually think that there is and should be upward pressure on bond yields and treasury yields and such. I don't think that this is a fake out. I think that we may have fits and starts, but I think the overall direction of the yield should and will be going higher, and that's going to hit tech, and you'll find some opportunities in tech. I think Facebook is a buy right now, for example, and I think any weakness on regulatory concerns and weakness on the yield makes it an even stronger buy. It's one of those things that you just buy and you cost average down on. I consider Take-Two in itself cyclical in nature. When there's no catalyst immediately ahead, you can still buy this and hold it if you're going to go very long on it, maybe wait for GTA 6, but who knows when that's going to come out. There's no immediate major catalyst for Take-Two Interactive, so if you've made the money on it, I think you just take it, and you might get a better opportunity on it later.
All right.
But Facebook, on the other hand, earnings per share are large enough right now to provide defense against any rate rising. Well, I'm sorry, yields rising and stuff like that for its stock price. So their earnings per share is around I think $10 per share for FY 2020, and that's a really, really good. That's a really good EPS, and that justifies the share price currently. So go ahead, Dave.
I don't think people are worried about the earnings per share of Facebook right now. I'm just putting that out there. I think there's other things that people are seeing in the headlines right now that have them a little more concerned with Facebook.
Oh, I've had...
So since you brought up Facebook, let's just go in there, shall we?
Sure.
Because I got a few topics to talk about. The headlines right now are the whistleblower of regulation. What's the possibility? What's not the possibility? How do you play it with given that? And you're saying that with the earnings they have, no matter which way this outcomes, they're going to end up going up, is what you're saying.
Yeah. I don't think you have any real threats to Facebook. In fact, regulations, they may weigh on earnings a bit, but the fact of the matter is, as we know, Facebook is an absolute behemoth. It is a huge company with tons and tons of money. And the companies that will survive new internet regulations and even thrive in those areas are the companies that are already big. The ones that are trying to threaten Facebook, the smaller companies that are coming out, which there's not many of them anymore, those companies are going to have the hardest time with the new regulations, not Facebook.
Gotcha. So So just one last time, I just want to verify, you're not concerned at all with the whistleblower on Capitol Hill right now.
I don't have a crystal ball to say what she's going to, to know exactly what she's going to say in the future, what's going to come about it. But as of right now, no.
Gotcha. I mean, because for me, some of her allegations are kind of serious. You know, she's saying that Facebook understands what it's doing, and that they will take someone who is, say, going on there looking for cooking recipes, and within a couple of minutes they'll have them looking at anorexia videos, trying to tell them that that's the best way to lose weight. And they'll also they push the extreme narratives in order to get people going and get them interacting with the posts, and that Facebook is actively doing this, and they created algorithms to do this, and this is what's dividing America and what's causing like young women to have eating disorders. And this is what she's saying right now on Capitol Hill.
Does she have data to back it up? I haven't seen any data to actually back that up, that it's causing eating disorders.
As of right now, the allegations, I don't know if she's provided anybody with data before she came out as a whistleblower, because she would have had to have done that first. Otherwise, you know, they would have been erased and deleted by now.
I think it all comes down to speech on the platform that some people don't necessarily agree with, and that some people may think is, you know, fake information or, you know, misinformation, which I think that's the major thing that a lot of these politicians and stuff are concerned with. And I think their anger or frustration or whatever, if it's at all genuine, is misdirected. For example, like in the 1800s, I don't think people were screaming and yelling or trying to regulate tree stumps and podiums, because it doesn't make any sense to do that. You know?
Right. So here's how it's going to affect its business from a strictly business perspective. Of what the worst case scenario is, that the government will come out and start regulating the algorithms, and they'll make it so that Facebook can only show things in the chronological order how they were posted to Facebook, and they cannot push them in any kind of funnel to force you to look at things they want you to look at to make it more interactive. They have to just show you what's in order, right?
Right.
So if that happens, what they're saying, what the whistleblower is saying, is you will be less interactive. You will be less interested. You will not find these hyper-inflammatory posts as much, not nearly as much. And so therefore you're going to spend less time on Facebook, less interaction. So Facebook makes less money. But the question is, how much less money? Is this algorithm really making a difference to your viewership and ads? Like, is it 10%? Is it 5%? Is it 20%? How much less money is attributed due to these algorithms that Facebook push these posts towards you? And that will be the question of how much it affects Facebook stock, because they make money from ads.
Yeah, which, I mean, a lot of people now only advertise through Google and Facebook. Those are the two behemoths in that world. I don't see that changing. I don't see it change. Everybody jumps on Facebook and scrolls through Facebook throughout the day, except for you, because you don't have a Facebook anymore. But most people do that, and that habit isn't going away anytime soon. And I think for people to be angry at Facebook because of extreme rhetoric or extreme speech, those people must not have been around in the 90s when email was first invented, and we were all getting chain letters.
Chat rooms, man.
Yeah, or chat rooms.
Chat rooms.
This stuff has always existed, and it should be allowed to exist as long as it's not, you know, directly inciting violence. It's about freedom of speech, which is very important, whether or not the person is saying something that is true. The onus is on you to do the research and try to figure that out for yourself. It's not on a central entity or the government to try to decide that, and that's a very dangerous path to go down, in my opinion.
Yeah, and I don't even want to talk about that. I just want to know, I mean, if the federal government says that these algorithms Facebook using is not the right thing to do and they got to quit it, what kind of percentage you hit to the advertisement revenue does do. So,
but then the question is, what kind of power do they have?
Agree with the whistleblower, bro. If
you
come out and agree with that whistleblower, I see from pre-whistleblower a 10 to 20% difference in Facebook stock at the end of it.
Maybe short term. Maybe short term.
But they've already hit that 10%, right?
Yeah.
So if you believe that, like I believe that, then Facebook's already hit that 10%, is right now a buying opportunity.
I think you can dabble into it. And I think with anything, you leave some capital on the side to cost average down if need be. But I think over the long term, this will correct itself as it always has in the past. And I think with regulations, the crazy thing is these big businesses often emerge stronger in the end because they become more monopolized.
And I think Facebook is quote unquote too big to fail in the court right now.
Yeah, for sure.
They're Google size, so Google is too big to fail in the court. Facebook's too big to fail in the court, man, and the courtroom can't hold sway over Facebook. I can't see it. We're in the United States.
Yeah.
Maybe if it was in another country, i.e. China, it could be different, but not here.
For sure.
So Facebook, we both agree it looks pretty tantalizing right now, but I am not ready to say it's a buy right now. I say I'm thinking about an opportunity to get in, but I want to see more what this whistleblower has to say before I get in. I'm worried about the algorithms, and if the government's going to say you have to cut out those algorithms because that could be driving a large percentage of Facebook sales.
That's understandable. All right, other news. Best Buy today announced the Total Tech membership, which is like a loyalty program or club, sort of like a Costco kind of club, but a little different. It's $199 a year. Customers get around-the-clock tech support, and they get first access to high-demand products. I don't think this is going to be really accepted very well by consumers. To me, what this is, and they haven't announced it specifically, you're going to get first access probably to PlayStation 5 and to the new Xbox Series X when those show up in the stores finally. I don't like it. To me, it just seems like Best Buy is trying to take advantage of the shortages that are created by the pandemic. I think it's rather transparent. I know they're probably trying to make up for, maybe some losses because of the supply shortages, but I think it's in bad taste, personally.
Whether or not it's in bad taste, subscription models work. Subscription models produce profits for companies. The question is whether or not Best Buy can get people to pay in the subscription model. Me, as someone who likes tech gadgets, will I spend the $200? $200 not a lot of money to me, man. Will I throw that down to go ahead and get first on everything so I can say, hey, Brandon, look what I got and you don't got? I don't know, man. I don't know. I don't see a need for myself to do it. I don't buy enough tech gadgets. The only thing I would do, the only way I would get into this is maybe PlayStation 5. But then I might as well jump on eBay and spend an additional $200 on trying to procure a PlayStation 5, which I refuse to do. So then, yeah, we're both looking at it right now. I mean, it's just our perspective. There's many others, billions of different perspectives on this. But looking at it from our perspective, we don't see a need for us to go ahead and purchase this. No. So we're both feeling like this. There's not much behind this to really drive it. Subscription models work, yes. Does Best Buy have a subscription model that is going to take off?
We'll see.
I don't think so. I don't think so either.
I
say no.
If it does, I'm not going to like it, because if it does, then other companies are going to follow suit, and then all of a sudden Target will be doing it. I hope not, personally.
But the tech support does come in handy, though.
It does.
People do have tech questions.
Yeah, and then you're going to get there's going to be free delivery on certain things too. Sorry.
So it's like a Prime.
Yeah.
I mean, come on, Brandon. People pay money for Prime.
I don't think it's too
movies and TV. So
yeah, that's why I have Prime. I have Amazon Prime specifically for the movies and TV. And
really? JK. All right, so I mean, I don't know. I think this is a good opportunity. How did the stock move today? Did you look at it?
No, I didn't look at it. I think it was flat when I was watching the news on CNBC.
The stock is up today, almost a percentage point, up to 106.37.
I don't know if there's a reaction to that though. I mean, the whole market was up today, which I don't think you should trace. I don't think you should chase this rally. I'm not certain that the volatility's over by any means. I don't call it a comeback just yet. I don't think.
Don't call it a comeback.
You still got rising oil prices. You've still got rising yields. Yesterday's problems have not resolved themselves. That doesn't mean that I'm not a bull still for the long term. It just means that like these short term, medium term problems that are not gone. They're still here.
What I see during retail in October is the big corporations, Goldman Sachs, JP Morgan, Morgan Stanley, put in some positions in certain retailers ahead of Christmas time. That way, when the retail investors jump in November, they're like, "Oh yeah, look at me, I'm getting in here." JP Morgan's like, "I've been in there for a month now. You're just making me get 20%. Thank you."
Yep, I agree with that. I mean? Yeah.
So I mean, and you're going to see some retail choices being made now on who they think is actually gonna really pay off from this Christmas rally. If everybody gets a Christmas rally, will we get a Christmas rally? Is the logistics system in the United States going to support a Christmas rally? Do we buy retailers thinking that we're going to see something on Christmas? Or do we hold off and say, people don't have money, no one's going to be able to ship anything, it's just going to be gift cards this year? I mean, I don't know, man. What do you think?
It depends. I think it really depends on the jobs. I think it depends on inflation, and I think it depends on the stock, not the stock, but the supply chain.
All right,
stock levels of companies.
I'm gonna cover all three real quick in 30 seconds, right?
Sure.
Nobody's going back to work who's still out of work, even though there's plenty of jobs. They don't want the jobs that are there, right? B, inflation. We've been talking about it for months, Brandon. It is not going away anytime soon. It's going to take a couple months to go away. It's not going to go away in a couple weeks. So if it is going to go away, it's not going to go away by Christmas. So that answers that question right there. My biggest concern is actually the logistics system we have in the United States. We are short on drivers. We are short on carriers. Do we have enough in the system? Because Tesla doesn't have their electronic autonomous driving vehicles up and running. So we don't have that system in place right now. So we have to depend upon human drivers, and we don't have enough.
No, we don't. I don't know what's going to happen in the future. I agree with everything that you said, but the best way to combat it, number one, if you're investing, you pick good companies at good valuations. That's it. And you just stick with that. Number two, if you're trading, you just stick with what works and you keep doing what has been working. You find a strategy that works for you and you just go with it. And if you're doing those two things, then none of this should really panic you at all. The CNBC sky is falling, fire is coming out of the sky days, those shouldn't affect you. And the days where CNBC is buying everything and, pumping up certain stocks, that shouldn't affect you either. So it just comes down to stick to your basics and stick to your strategy, and you'll be fine in the end. That's it.
I 100% agree, and I want to talk about those principles for a couple minutes here, because I knew we were eventually going to get here. First principle is, stick to what works for you. So, our retail investor listeners right now are out there wondering, like, what are these guys talking about? What do you mean? And I'm like, well, look, if you've always traded the banks, right, the PNC, JP Morgan, US Bank, Bank of America, and those are the ones you've traded over and over and over again, and you really know how they cycle through things and how they work and what news really affects them. And that's what you've been doing, and you made 5% a month, right? Which is awesome if you're doing that, by the way. Applaud you. But if you're doing that and you're making that 5% a month off them, then stick with it. Don't change what you're doing. Don't try to say, oh, well, Brandon's talking about tech. I need to start going into tech. No, stick with the banks. That's what's worked for you. You know, you're doing well. You don't need to reinvent the wheel, man. You don't need a triple shot, extra foam, 3 shots of cream, frappuccino.
Pumpkin spice.
Like, whatever. Just get black coffee and call it a day, because you know what? That's going to give you the energy you need. So what my point of
does black coffee come in pumpkin spice flavor?
Brandon, I don't want to kill any more pumpkins to make your pumpkin spice. So the point I'm making is, like, guys, you don't need to try to do whatever cool and happening right now. Stick to what works for you. And as far as like day trading, I'm a day trader. I've day traded for years and years and years. Brandon knows this. I'll be in and out of stock sometimes in an hour. Or sometimes the shortest I've been in the stock or out of stock, I was at Starbucks with me and a few other day traders. We're having coffee in the middle of the day on a weekday, and we're sitting there, and we all had the same company that we're going to be moving that day. So I went ahead and bought in. As I hit buy and the sale went through, it jumped 5% in 1 minute. I literally turned around and hit sell and sold and made 5% by just clicking buttons on my phone as fast as I could. There's always going to be opportunities like that as a day trader. As a day trader, you don't care if the market's going up or down, because there's always an opportunity every single day to make 1 to 5%.
Yeah, you can make it up going up or going down. It doesn't matter. You know, you can buy puts, you can buy calls, you can short something, whatever.
Right? I can make money every which way if I'm a day trader and I'm in and out like that. Now, you should never do that with your investments. Investments are what you hold long term, and those go up and down. Nothing ever moves in a straight line. So there's ups, there's downs, there's bad periods, good periods. You just hope over the course of a long term it's going to move up more than it moves down, and that's the goal.
It can be hard to do. It took me a very long time to become good at trading and investing at the same time, and the reason is with investing, the intraday moves shouldn't affect your decisions whatsoever, and whatever's going on in the fray, and I hate picking on them, but I also love picking on them. Whatever's happening on CNBC or Bloomberg or whoever, like, those days it shouldn't bug you. But if you're trading, you want to trade kind of with the fray oftentimes. So you kind of actually, like, if you're doing both, you have to know what's going on, but then, like, with your investments, you also have to not allow it to affect you. And you need to be rational about your decision making.
Yeah, it creates a certain discipline when it comes to stock investing, and that discipline is what's going to allow you to be wealthy and rich. Is if you're able to hit that 5% a week and not touch your money, then you're going to be a multimillionaire very, very easily. The math is simple. If you start with $1,000, you do 5% a week, the math adds up, Don't go on cross-country Euro trips like I did 8 years ago. It was, I will say, it was like one of the best. Talk about this. This is a perfect example.
That was one of the best experiences of my life, though. I will say that.
Yeah. So let me take 1 minute and let's talk about this. So Brandon, when he first met me and he started stock investing and trading, he made quite a bit of money. He did very, very well. And he took his money and then he disappeared for a couple months.
Spent it all.
To Europe, and just was like, I'm going to Europe for a couple months.
It was just 2 weeks, but it was like,
it felt like a couple.
Oh yeah, it was 5 or 6 different countries. It was a long trip.
Like you can, guys, caviar,
5-star hotels. I did, and then I did the same thing. I stayed in Manhattan and New York City for 7 days.
Yes.
Before that. So I gave this whole speech a couple of months ago about how you need to live the investing lifestyle so that you can realize what compounding gains does to your portfolio. I was saying that from experience because in the past I had taken all my cash out and spent it.
And he thus slowed his growth tremendously. It's like when you have a 401k and it says, look, if you do this withdrawal, this is how it's going to affect your long-term growth of this 401k.
Yeah.
You got to look at your stock account as the same thing,
right.
man. That's your retirement. That is not a slush fund for you to go ahead and, spend on a new sofa or patio set. Now, there's other things you can spend it on, but
Lambos. I'm just kidding.
But anyways, point is discipline, man. You got to have discipline in this game, and you got to understand that the daily ups and downs of your for your long-term investments don't matter. It doesn't matter if it's down 20% today. It's a long-term investment, so you're holding it for the long term. If you're day trading, you should be in and out. You should be watching the macro events and the news of the day and knowing what's going on before you get in.
Sure.
What you got next, Brandon? What's our next topic?
So, we were talking about inflation, which brings up the fact that inflation means higher oil prices. When I bought into Delta Airlines a couple of months ago, my base case scenario was that I thought oil would peak over the travel season in the summer. And it did not happen. It's peaking now for some reason. And it's probably going in line with inflation because, oil is directly tied to the U.S. dollar. So as the U.S. dollar decreases in value, the price of oil goes up. And if you look at the airlines and the airline industry, it is a very highly competitive industry with very thin margins, even in the healthiest of environments. So I closed my Delta Airlines position completely, I think it was yesterday, and I got about a 13% gain on it. But you want to be prudent, right? So you always kind of want to ask, like, what's next? You want to be future oriented. And I still don't believe that commercial travel or business travel demand is going to subside. I think it's going to continue going up now that we're kind of getting through the Delta COVID peak. So I'm still bullish on people traveling. I'm just not bullish as much on the airline industries, which I believe will have the price of oil as a cloud hanging over it and pressuring its earnings in the future. So I wanted to come up with ways to play air travel without buying into the airlines. And I found 3 different stocks. One I've talked about already. That's General Electric. We won't go too much into it because we spent almost an entire episode a couple of months back covering their turnaround. And, just the fact that I think in the future, it's a great possibility that colleges all over the country will have the story of General Electric in their textbooks as a great turnaround story, as long as everything continues to go the way that it's going right now. So I like General Electric as a travel play. They make the airline parts and stuff like that, and they don't have the price of oil hanging over them the way that Delta or Southwest or any of the airline companies do. I also like Raytheon Technologies. I like that. It's the same thing. They service air parts. They don't have the price of oil hanging over them as much, and they are diversified into defense for the United States government. But I also like Honeywell. October 2nd, they announced that they will boost their annual dividend by about 5%. That's not much, but it's still a nice boost, and it shows confidence in their business going forward. Their interests and their businesses also include, as I mentioned, aerospace, building technologies, and safety solutions. So it's diversified well. It stands to benefit from all sectors involved in what's left of the reopening trades, and also does not have the cloud of oil prices hanging over them like the airline industry does. In fact, they're hedged against any potential drop in demand in the airlines from increased oil prices because they're involved in manufacturing technology for refineries. So, increase of oil drilling and increase of oil prices actually benefits them. Plus, the return on equity, it sits around 27.5%. For anyone listening for the first time, this is one of the most important gauges that I look at for any stock. Anything over 15% of a return on equity is considered good. I think this should be considered a core holding in any portfolio. And if you look at it, 45% of their earnings come from commercial aviation. As I said, I'm still bullish on the demand for commercial aviation. I just don't like the margins of the airlines.
Yeah, I see your point. I've invested with Honeywell years ago, like over 10 years ago is what I was saying before we started tonight when you said you were going to talk about Honeywell. A couple of things here about Honeywell and then the airlines in general as well is I believe that the airlines, because they did retire a lot of airplanes during COVID, they used that opportunity to get rid of the older aging airplanes. So they are going to get some new ones. So they will need Honeywell, and they're going to refit some of the older ones that they did keep. So that's a good play there in that regard. As far as the airlines in general, OPEC did come out and say that they are going to go ahead and boost production, and that should keep oil prices steady so they don't rise anymore. But as far as, oil prices staying at this level, this is the highest level we've had since 2014, they said.
Yeah.
And so it is quite high, the price at the pump right now. There are things that the U.S. economy can do to help that and mitigate that. But I mean, it's just the way it's going to be right now. I don't see why oil companies aren't moving up with the price of oil. I've always questioned that. I questioned that back in, what was it, May?
Yeah.
Where we're looking at that, and they still aren't moving. But Honeywell, let's focus on airlines and Honeywell right now. Honeywell is... It's according to everything you're throwing out there, I agree. It's a good play right now.
I think so.
I like it.
I think so. And as far as the airlines go, I think it's important for me to say that I still believe that Delta Airlines is the best in its breed, but those margins, with the rising cost of oil and stuff like that, I'm staying out of the airline industry now that I've made my profits. So.
Yeah, I mean, and that's a smart thing to do, man. Take your profits. You don't need to keep going back in, and that company that you bought and it went up 13%,
Delta.
Whether it's Delta or somebody else or whatever, whether you did have Amazon or anybody else, you don't need to keep going back in thinking it's going to keep going higher and higher and higher.
Right.
Take your profit, look for another opportunity, or wait for a dip or drop down to get back in and make that 13% again. So
sure.
Right, there you go, man.
That's all I got for today.
I think we've about covered it all, man. I think we're good here on what we have, but I am going to look more into oil again because that is something I've covered numerous times, and I enjoy covering and looking into as far as like the behind the scenes of oil. Because of the new OPEC news this past week of them saying that they want to go ahead and increase production, when we all know that they can increase production by a lot right now. They can really flood the market if they want to do with oil, but they haven't been. They've been really holding tight, trying to drive with that price, which they need right now, especially some of the Middle Eastern countries really need that extra boost in income right now because they've been hurting from the COVID pandemic.
Well, I think that a lot of refineries and a lot of oil drillers, too, are concerned still about the electrification of vehicles. And I know that we're always going to need oil for, so many uses. I mean, it's used to make rubber. It's used to make a lot of different things. But I do think that they're still concerned with the future being electric vehicles, autonomous vehicles, things like that. But then also so many corporations and governments pushing for environmental sustainability and regulations and things like that. So I think that's one of the reasons why you haven't seen as much drilling right now as you would expect, because they're trying to rake in the profits now while they still have them. Or at least that would be my mindset if I was in that industry.
I mean, you're going to have them for at least 10, 15 more years, man.
Yeah.
Think about it, man. Is it the everyday mom and pop driving to from work that's really the biggest consumer of oil?
I don't know. Is it?
It's the truck drivers. It's the airplanes. It's the commercial industries of the United States.
Yeah,
until Tesla gets their autonomous electronic vehicles trucking up and running all over the United States and not just Southern California and Arizona, then we're still going to have a huge demand for oil. But I mean, we're not even the biggest consumers. You're looking at China and India. So, I mean, even if the United States was 100% renewable energy, you would still have China and India out there, consuming all these non-renewable resources. So it's still a play for sure. That aspect alone, Because, I mean, people forget. A lot of American retail investors like to think that the United States is the center of the world, but I always try to remind them that, there are almost 3 billion people in China and India. Those two countries. Yeah. Like, you got to understand that. Like, if they are the number one consumers of oil and causing pollution and all this other stuff, the United States could be green all at once. But if we don't get them on the same page as us, it doesn't make a difference.
That's true.
And that's what I've always mentioned to people is you got to understand that we're not the center of the world here, guys. All right, so that's all we got for tonight. That's all I got. Final word, final thought. I'll give you mine first and let Brandon get the last word in. Facebook off this dip is looking interesting. Am I ready to call to buy? Not quite. Maybe. I don't know. I know Brandon and I recently played NVIDIA. And we took that as a buying opportunity yesterday. I should have posted it on Instagram. I did not. I apologize to all of you who follow us. We should have posted it, but that was an opportunity we took and we made. And we're looking for other opportunities like that. Those would be opportunities to look for something is a solid company, not going anywhere, but the whole news of the day drove it down. Look for these opportunities. Don't go out of your warehouse. If you invest with banks, stay with banks, watch them. Don't try to follow the rising tide. Oh, everybody's invested in Facebook today. I got to go over there and invest. No, you don't have to. Stick with what stick to your guns and be consistent. That's the key, being consistent. Brandon?
There's speculation in everything, which is fine. I mean, even in your everyday investment decisions, there's speculation, but you want to stick to your guns, you want to stick to your strategy, and you want to stick to what works, regardless of what's happening. I saw on one of my Facebook groups, people were reacting to the fact that the author of the Rich Dad, Poor Dad, he predicted that the greatest stock market crash in the world would start yesterday. And he's really intelligent. He's wrote, the Rich Dad, Poor Dad books, which are very popular. But crystal balls, I heard this statement the other day. I don't remember who said it to me, but they said crystal balls cost a lot in credibility, right? So you can make these predictions and be completely wrong, and they cost a lot in credibility. They cost a lot of money too. So regardless of what people are saying, because there were a lot of people that apparently sold the market yesterday based on his prediction that it would start to crash and be the world's largest crash based on Evergrande, is what he was saying, the Evergrande situation in China. And I don't think... I think there's a lot of people that are probably going to lose money because of that. If that's your mindset, you want to stick to the things that work, and that's it. And don't panic and don't react. Emotion has no place in stock market investing. Only rationality.
Yep.
Maybe you're riding off the back of the other people who are being emotional, and that's fine because that's a rational way of doing things too.
Yeah, exactly. All right, guys, as always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. We hope you have a good night, guys. Enjoy it.
Have a good night.